I just try to copy paste. So whenever I copy paste to the remaining years, the figures increase by one. I think one of you basically have identified that it should be the same for all the year, which is 3, 4, 6, 5. Okay. So when I want to be fast, I forgot. I just copy and drag it, then it becomes 3, 4, 6, 6, 3, 4, 6, 7, 3, 4, 6, 8. It's actually to be the same amount, which is 3, 4, 6, 5. I think that is have been spotted by one of your colleagues. So that is a small correction. But I think the examples or exercise which we have done with regards to post-employment benefit, I think that should be enough. So for today, I just would like to focus on contract modification. Okay, contract modification and how would you account for a contract modification? Because I think I myself initially also have some confusion, but when I read more and more, I think I would like to basically address again this issue on contract modifications. Are you? Can you all hear me?
Yes, sir.
Okay.
Yes, sir.
Okay. So for contract modification, as I go through further and further, I think this. So let me share you the illustrative example from. I think if you want this illustrative example, actually you can also download from the internet. Okay. But if you want me to upload also, I can basically upload it since I have downloaded it. So with regards to contract modification, let me just share you the document. Okay. Okay. Sorry. Uh, wait. Um, okay. Can you see this document?
Can.
Can all of
Yes,
you see the
yes,
document?
yes, sir.
Okay. So inshallah, I will also share this. Of course, it is long, but it have a lot of illustrative examples. But we will focus to what we have done, okay, in classes. Okay. So I think this graph is a good explanation lah with regard to contract modification. Okay. With regards to contract modification. So when you look into a contract modification, you are basically looking whether there are additional good or services. Okay, whether there are additional good or services which need to be added to the original contracts. Okay, so of course, if there are additional good or services which need to be added, okay, which need to be added to the contracts, okay, then only you evaluate whether this additional good or this additional requirement of good or services will lead toward a separate contract or not. Okay. So the key issue here is whether there is any additional good or services which need to be added into the original contract. Okay, so if there is no additional good or services, of course, the treatment is the one which is below. Okay, so you will only create a separate contracts, okay, if you have an additional goods and that additional good or services is distinct. So later I will show you, because in MFRS 15, okay, there is also a definition what distinct mean. Okay, what distinct mean. Okay, so first you need to see whether you have additional requirement to provide additional good or services. If yes, then you need to look whether that additional good or services is distinct, okay, and whether the price of these additional goods or services is basically reflecting its stand-alone selling price. It is not influenced, okay, by the other prices in the contract. It is its own price, okay. It is its own price. So what distinct mean? So let me show you this. This comes from paragraph 27, okay. This comes from paragraph 27 from MFRS 15. Okay, a good is distinct if you need to meet two criteria. Okay, you meet to meet two criteria. First, if the good, okay, can be used on its own. Okay, can be used on its own. It doesn't require. Okay, it doesn't require um, other. Okay, other good or services to be provided. When it is delivered, it can be used on its own, okay, on its own, or okay, might be the customer who have ordered that good, it can use it with the other available resources in the company. Okay, it does not require to be used together with some other product which might not have been delivered. Okay, because sometimes when you have a customer order, you might have, uh, for example, two different delivery or two set, okay, of delivery of promises to deliver the product. So a product is distinct. Distinct mean if the product has been delivered, it can be used on its own, okay, without having to wait, okay, for the second batches, for example, of the product to be sent, or even if the company can use it with other available resources that is already there in the customer premises or facility, that show that the product is distinct. Okay, so that is one. Okay, and the product is distinct if, okay, the promise to deliver the product can be separately identifiable from the other promises in the contracts. So if in the contract you only have, okay, you only have um, one promise, most probably that all the product there is basically not distinct, because you need to basically because you cannot separately identify different batches, because it's only have one, okay, one batch of delivery. Okay, so if you can separately identify from other promises, that will also prove might lead toward a distinct characteristic. But okay, but of course, in there is a further discussion in the standard. Okay, even if you have separately identifiable, but if the first batch and the second batch is basically connected, for example, the first batch of the product is basically for the purpose to prepare for the second batch of the product to be sent or to be delivered, then that again might not lead toward a distinct criteria. Okay, so these two must be able to be used on its own, and the promise, okay, is separately identifiable from the other promises in the contracts. Okay, so that is the two criteria which need to be met, okay, in order to meet the criteria of this thing. If not, then you can just consider that the good are not distinct. So that is basically the distinct criteria. So when you look into an additional goods or services which might be required, that might modify the original contracts. If the additional good and services is distinct, okay, and the price of that additional goods is basically reflected its own price, then just create a new contract. Okay, then just create a new contract. So don't modify, okay, the original contract, because the additional goods or services are basically distinct, and its price is not affected, okay, by the other prices, okay, in the contract. It is its own price. So just create a new contracts. Is that okay with you? So any
Sir,
question on that? Yep. Yeah.
could you give some example for each
Okay. Because I will go back.
criteria?
I will go back to whatever example which I have given you before, together with the additional question which I gave you as an example
Wait, sir.
later. Huh?
So
Okay. Yeah.
the promise part, right? Can you explain again? Sorry.
Because, for example, if you already agreed on initial contract that it should be delivered in two phases, okay? So that's why when you look into the discussion by the standard, it says that two or more promises. Okay, so that's mean, for example, the customer order 100 unit. The first 50 unit will be sent on certain date, let's say on 31st of January. The second 50 unit will be sent on 31st or delivered on 31st of March. That is some criteria, okay, of identifiable, okay, promises, okay. But two separate promises is not necessarily distinct. That is what has been discussed in the standard. So that is one criteria for you to identify distinct. Okay. So if you basically already promised that the delivery will be in two batches, the first batch on certain date and the second batch on the certain other date, but not necessarily. But that is already an initial condition, because you have two different promises which can be separately been identifiable, but if still related, for example, the first 50 batches, if it is still related, for example, the first 50 batches will be used as an input for the delivery of the second 50 units, okay? Then it is yet not a distinct, because the first 50 unit is delivered as an input for the second 50 unit to be delivered at the later stage. So if that is the case, then that is again not distinct. Okay, not distinct, because the first requirement, okay, whenever you deliver, it can be used on its own. It doesn't require, okay, doesn't require the additional 50 unit to be sent. Then only it can be used. So both need to be exist. Okay, both need to be exist. Can be used on its own, and okay, you have basically identified, okay, a separate delivery of the 100 unit which has been ordered by the customer. Is that okay, sister?
Yeah, okay. Thank you, sir.
Any other question? Any other question from
Sir,
brother or sister? Yep. Yeah.
if both product from the first and second batch is the same product, is it still considered distinct?
If it is the same product, okay. If it is the same product, but you have agreed to deliver it in two separate batches, okay, in two separate batches, then it is distinct. Okay, then it is distinct, because you have basically agreed to deliver it at two different point of time. Same products, but delivery at two different point of time, it is still distinct. Okay, because the other criteria is even when you send the first 50, distinct mean when you send the first 50, you can straight away use that first 50. You does not need to wait for the second 50 to be sent. Okay, to be sent. But of course, you need to identify it clearly in the contract. Okay, that you will send it like that. Okay, you will send it like that. So when the customer receive the first 50 unit, he can straight away use it without having to wait. Okay, the second unit to be delivered. Sister?
Okay, sir. Thank you.
Okay. Okay. So that is the criteria. When it's sent, it can be used and owned, and from the contract itself, it is clearly separately identified. Okay, separately identified, and then it become distinct. Okay, then it become distinct. But for creating a new contract, okay, it must be an additional goods. Okay, it must be an additional goods. Okay, so that's mean, for example, uh, a customer have ordered already 100 units. Suddenly the customer say, I want to add another 50. Okay, another 50. Okay, so first is, yes, the other 50 will be distinct. Okay, the other 50 will be distinct because that will involve possibly then you also need to look whether the price of the additional 50 more units is basically reflected in stand-alone selling price. Okay, if it's reflected in stand-alone selling price, then only you create a new contracts. Okay, then only you create a new contract. If it does not reflect stand-alone selling price, then you will go to no. Okay, then you will go to no. Then you only will apply the criteria of distinct or non-distinct. So of course, if it is distinct, okay, if it is distinct, then you will terminate. Because you will need to evaluate. Okay, evaluate the. For example, you might already have sent some. Okay, you need to evaluate whether the remaining is distinct or not. If it is distinct, then because creating a new contract and the other one, which is terminate and then create a new contract, might be very similar. The only difference is in the first one, when you create a new contract for additional goods or services, your original contract is still on. Okay, your original contract is still on. In addition to your original contract, you will write a new contract. But the bottom one, okay, you will terminate the original contract, and then you write a new contract. So that is the difference. Okay, and that is the difference. So if the additional goods and services are distinct and reflecting its own stand-alone selling price, then you just create a new contract for that additional good. Don't involve the original contract. So the original contract is still in effect. Okay, but if, for example, it does not reflect, okay, if does not reflect its stand-alone selling price, then you will go to no. Okay, however, the additional product might be distinct. Okay, then you just terminate the old contract and then return the new contract for the remaining unit. Okay, to be delivered to the customer. Is that clear?
Maybe we can
Yes, sir.
go and see examples, sir.
The examples, I will go back to what I have given to you, and also the one which I have given to you. Okay, I will give. If it's okay with this, then you go to the examples. Okay, then we go to the examples. So last class I give you these examples. Okay, give you these examples. So I will skip question 1 and 2 first. Question 1 and 2 is about allocating transaction price. Question 3 is and 4 is about contract modification. Okay, is about contract modification. So this question 3, okay. So company PQR promised to sell 120 unit of product A to customer for 12,000 ringgit. Okay, so that's mean the price for a unit of product A is 100 ringgit. Okay, this product transferred to a customer over a 6-month period of time. Okay, so that's mean it will be delivered on batches. Okay, on batches. The entity transfer control of each product at a point of time. Okay, so that's mean it basically stated that um, whenever the customer receive the product, the control is transferred. That's mean there is no issue in the customers to start utilizing it and use it because the control has been transferred to the customer. After the company have transferred the control of 60 unit of product A to customer, the contract is modified. Okay, so after they have delivered 60 unit, contract is modified where there is an additional requirement to deliver an additional 30 units of product A to the customer. Although the product are the same product, okay, are the same product, but they are distinct because whatever batches which has been sent to the customer can basically immediately utilize. Okay, the issue here, for example, the control of the product has been transferred. It is stated clearly in the contract that it will transfer over a period of 6 months. Okay, over a period of 6 months. So of course, in total, okay, it become 150 units of product A will be delivered to the customer. So the issue here is, okay, how would you treat, okay, the additional requirement of delivery of an additional 30 units, okay, of product A, which was not included in the initial contract. In case, so you know that the product is already distinct. There is a request of additional product and the product are distinct, okay, are distinct because each delivery, okay, each delivery, it will come with a transfer of a control, okay, to the customer. Okay, now how about the price? Okay, so how about the price? So in case A, okay, it was stated that when the contract was modified, the price for the contract modification for additional 30 unit of product A is 95 ringgit per an additional unit. Okay, so it's different. It's 95 ringgit, not 100 ringgit. Okay, and this 95 ringgit reflect a stand-alone prices. Have nothing to do. Okay, it have nothing to do with the initial price of 100 ringgit in the initial contract of 120 unit. Okay, so based on negotiation, they might come with a different price, and this price have nothing to do, okay, with the original price of 100 ringgit. It's since the price is also reflecting, okay, a stand-alone price for the additional 30 units. So the treatment is to create a separate contract for this additional product. So the original contract to deliver remaining 60 ringgit remain. Okay, don't touch that. Okay, then you just create a new contract for 30 units of product A at the price of 95 ringgit, which bring you to a total of 2,850. Okay, so that would be the answer for case A. Okay, okay, so don't touch the additional, don't touch original contract. This new additional requirement or request are distinct and reflecting a stand-alone selling price. So that would be the answer. Different from case B. Okay, why my answers is moving? Okay, okay, okay. Question 3, case B. Okay, different from case B. In case B, during the process of negotiating the purchase of an additional 30 units of product A, The parties to the contract initially agree that the price will be 80 ringgit per unit. Okay, so if this just stop there, this 80 ringgit is a stand-alone selling price. However, the customer discovered that the initial 60 unit of product A transferred to customer contained minor defects that were unique to those delivered products. So that's mean now, because of that minor defects, the company promised a partial credit of 15 ringgit per unit. Now there is a link already. Okay, so most probably that you get that 80 ringgit because because of this partial credit which need to be paid by the company for the minor defects of the first 60 unit of product A delivered to the customer, and the company and the customer agree to incorporate the 900 ringgit credit, okay, because 15 ringgit per unit multiplied by 60 unit. So they have agreed to incorporate this credit of 900 ringgit into the price that the entity charges for the additional 30 units of product A. Okay, of product A. So although that the 30 units are distinct, but the price which have been negotiated have been affected by the initial price of the original contracts. Okay, of the original contracts. So because of that, okay, so in the treatment, okay, in this case B is to terminate the original contracts, okay, is to terminate the original contract and just create a new contracts, okay, and create the new contract for the remaining, okay, for the remaining units to be delivered to the customer. Okay, so that is an example of terminating the original contracts and creating a new contract. The case is because the price for the additional contract does not reflect a stand-alone selling price. Can you still hear me? I have some disturbance of some noise. Can you still hear me?
Yes, sir.
Can sir.
Okay, sorry, my neighbor actually. Okay, so that is an illustrative example. Okay, and this is basically adopted from that illustrative example of MFRS 15. Okay, one more example here. Okay, one more example here. This is with regard to a services. Okay, so where company Y have entered into a 3-year contract to clean a customer office on a weekly basis. Okay, the customer promised to pay 100,000 per year. Okay, so the services for each year is distinct because the services of the first year is not depend on the services in the second year. The same, the third year services will not depend, okay, on the services in the first year and the second year. The services itself in each year are distinct, okay, are distinct. It is on its own, okay, it is on its own. The price was when it was first originally agreed is for each annual cleaning services, the customer need to pay 100,000 per year. Okay, so the contract is on. First year fine, the customer pay. Second year also fine, the customer pay another 100,000. At the end of the second year, then there is a contract modification. Okay, at the end of the second year, the contract is modified, and the fee of the third year now is reduced to 80,000. In addition, the customer also agreed to extend the contract for an additional 3 years for a consideration of 200,000. That's mean if you divide it by 3 additional year, per year it becomes 66,667. If you calculate based on the stand-alone selling price, because now the the fees for a 1 year cleaning service is 80,000. Okay, if you multiply it by 3 years, it should be 320. Okay, it should be 320, because there are remaining 4 years. The third year, the fourth year, fifth year, and sixth year. So 4 years. 4 years multiplied by 80, it should be 320. But now, the third year has been reduced to 30,000. 3 more years, it has been charged at 200,000. So total now is only 280,000. It is not reflecting stand-alone selling, a stand-alone selling price. Are they distinct? Yes. These additional requirements are distinct, but it does not reflect stand-alone. It does not reflect the stand-alone selling price. Okay. So now you will also go to know. Okay. You will also go to know, but since the services are distinct, so what you do is you just terminate the original contract up to the point whatever you have completed. Then you write a new contract for the remaining 4 years of cleaning services. Okay, of course, now the new contract, the contract price is it's only 280,000, because if you use a standalone selling price, it should be 320. Okay, but it is not reflecting standalone selling price, so you just create a new one, terminate whatever have been completed for the first 2 years. For the remaining 4 years, you write a new contracts. Okay, you write a new contracts. So in final exams, okay, you will need to do this kind of evaluation. Okay. Of course, you might ask me whether you need to put a journal entry or not. You need to do an evaluation of the situation, and then just need to identify whether you need to create a separate contract, or whether you need to terminate original and create a new one, or whether you just maintain the original contract with some modifications. Any question you would like to ask? Is these 3 examples give you some idea on these contract modifications? Anything you would like to ask me?
So what about
Yeah.
previous example that you give us in week 8?
Okay.
The one
In
with
which-
the increased double price.
Okay. I go back to my example before. Okay. I think that one is the one which might create a bit of confusion. A bit of confusion. So I go back to what I have given you before. I think this one. Okay. This one. Okay. So this is the initial contract to provide 20 set of computer with processor Intel Celeron at the price of 1,500 on 1st of January 2019. Okay. Okay. Then illustration 1, I think that one is clear, straightforward. Okay. Because on 15th of January, the customer require additional 5 set of computer with a processor Intel Core i5. So of course, this is a totally different product, and it's also distinct. The price also reflect stand-alone selling price, 3,000 per unit. It doesn't have anything to do with the original price of 1,500. This is the standalone price of this computer Intel Core i5. So this one is very clear, distinct, reflect standalone selling price. So just create a separate contracts. Then you come to the second one. Okay, same information as initial contract. However, company only able to deliver 10 units. The agreement is actually to deliver 20 units, but maybe for some reason, okay, they are only able to deliver because for the remaining 10 unit, they cannot get that model at the initial price which they have agreed, which is 1,500. Okay, so the price now has increased to 1,600. Okay, so of course each unit are distinct. Okay, are distinct because whatever you have sent, okay, whatever you have sent can straight away be used, okay, can straight away be used. However, of course, in the original contract, you have not identified it to be delivered like that, okay, to deliver like that 10 and then another 10, okay. So what you have agreed is to deliver all the 20 units, okay. So this have only happened because suddenly cannot get all the 20 at the same cost, okay. Maybe you only left with the cost, okay, which have been estimated earlier 10 units. So the other 10 unit, when you want to get additional 10 unit, it is basically at a new price, okay. So yes, individual computer set are distinct because whatever has been sent, you can use it straight away, okay. Assuming that the transfer of the title is also been done and so on, but you have not agreed it like that, okay. So the second criteria, where it is separately identifiable, is basically not met, okay. It's basically not met. So that's why, okay, it is not distinct. The price might be reflecting a standalone selling price, but it is not distinct, okay, because you have some problem in meeting the second criteria for distinct, because you have not agreed it to be like that, okay, to be like that. So you just treat it because it is not distinct, okay, it is not distinct. Therefore, you just treat it as a modification, okay, to the original contract. That means you just adjust. There might be increase of 100 ringgit per unit for the remaining computers, okay, for the remaining computers. I think this one is still okay, but I think what the sister have just raised might be this one, okay, might be this one. This looks very similar. Looks very similar. So of course here I think a bit blur, might not be too clear, okay, because the illustration 2 and illustration 3 looks very similar, okay, looks very similar, okay. But in illustration 3, okay, in illustration 3, the increase in price is almost double, okay, is almost double. So as if now you would have a totally different kind of a computer system, okay, different. That is basically the assumption, okay, that is basically the assumption. So if you you might also have justification if you want to say it as illustration number 2. You might also have a justification if that significant increase in the price is basically assumed to reflect, okay, the specification of the computer, which might lead it to be distinct, okay, which might lead it to be distinct, okay, sorry, to be distinct, okay, to be distinct. So so now what I have said, so if it is okay, so I have not assumed this to be an additional good or services. This is just a replacement because the original contract already required 20, so you just need to fulfill the remaining 10, okay. So the remaining 10. However, okay, what has been assumed here is basically it is distinct, okay, it is distinct because they might have lead towards some modification, but still in the original contract there is no additional units, okay, it's still the 20 unit, but okay, it is still in the original contract. So that's why you don't create a separate contract, but you just terminate the old contract and create a new one, okay, and create a new one. Illustration 4, I just combine both illustration 2 and illustration 3. That means you have 50% situation of illustration 2 and 50% situation of illustration 3. If you look into the graph which I have shown you, when this happen, when you have both distinct and non-distinct, so company need to use their judgment, which one they want to use. Are they using distinct criteria or are they using non-distinct criteria? Then it is up to the judgment of the company. So whether they want to use distinct or whether they want to use a non-distinct. So that is how I would elaborate. Okay, I would elaborate the previous example or illustration which I have given you before. Is that already enough for you, sister, or you need to ask further questions? What is also very important, whenever you decide your answers, please provide with a justification. Okay, with a justification, because this is the issue now with a principle-based accounting standard. A lot of judgment or interpretation need to come in. Okay, so so whenever you provide your answer, don't just stop with your answer. Provide me with your justification, because I need to see how do you justify for that answer. So your answers will be very flexible. There is no one straight answers. Okay, there is no one straight answers. I also need to see your justification. Then only I can evaluate whether your answer is good or not. Okay, so that is my advice. That this will always happen with principle based, because it doesn't, because judgment need to come in from the company's side, and I will basically open, okay, for all this kind of flexibility. Okay, sisters who asked me before, is that enough or you want to ask further question?
Okay, I just want to reconfirm. So
Okay.
illustration 3, it's not an additional product,
Yeah.
but it's assumed to be a different function, is it? That's why we have
Yeah.
that's why we
It is just replacement to the original contracts. No additional unit is required, but this replacement of the remaining 10 unit are distinct. In illustration 2, we assume it not to be distinct. Okay, not to be distinct. So that's why we treat it just as a modification. Okay, just as a modification. But in why we say non-distinct in illustration 2 is because we have problem with the second criteria, where it should be identified earlier. If it is identified earlier that it will send 10 units and send another 10 units, then it is okay. Okay, that is the second criteria. Okay, but it is not like that when it was first initially agreed. It's also the same in the second, in the third, but we assume it to be distinct now because there is a significant changes in the requirement. Okay, in the requirement of the remaining 10 units. Okay, in the remaining 10 units. That is basically the assumption in illustration 3. So that's why we need to terminate. We cannot just modify the initial contract. We need to write a new one. We need to write a new one, and that's why we terminate it first and then write a new one to reflect the new criteria, okay, of the remaining 10 units.
Sir,
Can I, yeah, okay.
I'm a little
Brothers,
bit
okay.
confused. So if the product is distinct and the price does not reflect the standalone price, then we cannot modify the contract, right, sir? We have to terminate that contract and create a new contract, right? Is that right, sir?
First, you need to see whether there is an additional unit request. Okay, additional unit request. For example, in original contract 20, you ask for another 20. Now it becomes 40. That's the first one. Okay, that's the first one. Is there any additional unit request? Okay, if there is an additional unit request, okay, are they distinct and are their price is their its own standalone price? If all are yes, then just create a new contract. Don't bother about the original contracts. Okay. If there is no additional, okay, if there is no additional, for example, there is no additional units, there are or they are not also reflecting standalone prices, then you will go to no. Okay, then you will go to no. It's not yes. If it's yes, mean that there is an additional unit request, and and the additional unit are distinct, and the price is also a standalone prices. Then create new contract. The original contract is still on. However, if there is no additional unit required, yeah, then you will go to no because there is no additional unit required, and then you need to assess the remaining unit to be delivered. Okay. You only assess the remaining unit to be delivered. Are they distinct or not? Okay. Are they distinct or not? If the remaining unit to be delivered, that means there is no additional goods. They are only remaining, but you have modified in certain terms of the remaining unit. Then you need to try to find out whether they are distinct or not. If they are distinct, terminate the old contract or original contract and create a new one. If they are not distinct, just modify the original contract. If you have both, then you need to use your judgment, which one is more substantial. If you believe that the distinct portion is more substantial, then you can use distinct. If you believe, if the company believe the non-distinct is more substantial, then you can use the treatment for non-distinct. So that is how you treat it. So the brothers who just asked me, is that okay?
Okay, sir. Okay, thank you, sir.
Okay, so that is how you need to look whether there is an additional unit or not. If there is an additional unit, for this additional unit, you can create a separate contract if they are distinct and if their price is also their standalone prices. If there is no additional unit, or if there is an additional unit but the price is reflecting also the original price, actually you can just combine. Okay, actually you can just actually combine it to the original contract, but of course there are two treatment. Either terminate the contract at that point of contract modification and write a new one in replacing the old contract, or if they are not distinct, just continue with the original contract with the modification. So that is how you treat it. Is that okay? Hopefully it's okay. Hopefully. Any further questions? Sister who asked me through WhatsApp this morning. Can't remember your name. Those who asked me through WhatsApp a question about this. Hidayah Ken might be. I cannot remember.
Yeah. It was me, yeah. Bernard.
Is it okay now?
Yeah. Thank you, sir.
Okay. Any other questions? Okay. Your exam will be on 18, correct?
Yes.
Okay, if I'm
How's
not mistaken.
the format, sir?
Okay, I have discussed with Dr. Fatima. If I'm not mistaken, we have discussed and we think we need to explain to you the format, and Dr. Fatima has basically taken that role. I'm not sure whether she has asked all of you or not. she's thinking of doing it on Friday evening. This coming Friday in the evening. I'm not sure whether he has asked you or not because we have a department meeting in the morning. Initially, we thought to have it in the morning to explain to you about the structure of the question, okay, and what would you expect and so on. But now, after my discussion with her, I think she said she will arrange it on Friday evening. I'm not sure whether she have sent you any message. If not, you can also ask her. Inshallah on Friday evening. And our exam will be on 18, not the next week. So if there is some other issue, you can always contact me also. No problem. Okay? Is that okay, brothers and sisters?
Okay,
Sir,
sir.
Yeah. Yes.
on Friday evening, I'm not available because I have final exam for LE 4000.
Oh, I thought exam only started on 10. Okay. So you have exam on 8.
Yeah.
Okay. That is what we initially planned. So might be if there are only few, we need to still go on, but maybe you need to ask your friend because we need to tell you, okay, how the exam will be conducted. Okay, so that is what initially I have agreed with Dr. Fatima because she agreed to do that explanation, okay, on the structure of the final exam. And based on our discussion, we thought that Friday evening is the suitable time lah because in the morning, the whole morning, we will have a department meeting. But if you have exam, if there are only few, I think might be the best is because we still need to go to do it as soon as possible in order to prepare you. Maybe you need to ask, okay, your friend. But if there are many, maybe we need to rethink lah about the possible time. But I think if Dr. Fatima have not asked you, you can always ask Dr. Fatima lah, okay, about this because that is what I have agreed with her yesterday. Okay, yesterday on this issue. Okay, sorry sisters. If there are only few of you, might be we need to still go on lah. But you can always discuss with Dr. Fatima. Okay.
Okay, sir. Thank you.
Okay. Okay, I think this is the most important part. I think I also give you the first two question is basically a calculation. Okay, a calculation in allocating the price between the first question is about a combination. Okay, a combination of services between a handset and usage plan. So how do you allocate between the two? The second is about a discount. Okay. So I think these two questions, if I'm not sure, okay, it's already about 6:35. Um, okay. For the first question, there will be a combination of possible services. Okay, sorry, where is my question already? Okay, for the first question, there will be a combination because in handset, you have two model. In the usage plan, you have two usage plan. So two model of handset and two usage plan. So if you combine, there will be a possible 4 combination. Okay, for example, Y4 old model with the first usage plan and the second usage plan. That's the first two combination, and then you have the new model with the first usage plan and the second usage plan. So it will come total 4 combinations. So the issue here is only on how to allocate, okay, the price into both service because these two are two separate obligation. Okay, the handset and the usage plan is a separate obligation. So how would you do the allocations? Okay, so for this question, the answer is also from the illustrative example. So I think I can just upload it, although it is very long. Okay, but later on you can also use this for your later purposes after graduation. You can always refer to this illustrative example. The first one is basically on is here. The answer is here. So I think if you read the answer also, there will be not much problem to you to understand because it's not too complicated. Let me just see whether I can find it quickly. Here. Okay, so you have. Okay, so if you can see this, there you have 4 combination. Old handset, the 400 minute usage plan. Old handset 800 unit, 800 minutes. New handset, 400 minutes, and then new handset 800 minutes. Okay, 800 minutes. So how do you get the total transaction price? For old handset, the old handset will be given for free. Okay, for 40-minute usage plan, it will be 40 ringgit per month. So if this is a 2 years contract, it is 24 months, multiplied by 40 ringgit, that will lead you to a total consideration of the price is 960. Yes, the old handset will be given for free, but it comes as a package. Okay, it comes as a package. That's why you still need to allocate. There is a price allocated to the handset for the revenue recognition, and there is a price, okay, which is allocated to the usage plan for the purpose of revenue recognition. So you can look into the bottom. That is how it is calculated. Okay, I think it's the same way as a material right, because you need to use the standalone selling price for the purpose of allocating the total transaction price. Yes, it will be given for free, but the standalone selling price for the old handset is 250. Okay, so that's why when you look into customer A calculation, to get the allocated transaction price for the handset, you use the standalone selling price, okay, of the old handset, which is 250. Then the total price, okay, the 960 is already a standalone selling price for the usage plan for 400 minutes. So if you add 200, then you need the numerator in calculating the transaction price allocated for the old handset is 250 divided by the total price 250 plus 960, then you multiply by the total transaction price of 960. So that's why you get 198. Okay, of course the remaining will be allocated to the usage plan. So that is how you do it for the old handset 800 minute, new handset 400 minute, and also the new handset 800 minutes. So what I will do, inshallah, I will also upload this. So I just explained the first one. I hope you will be able to read and understand the remaining calculation. Okay. For the second question, yeah, okay, yep, yeah.
The 960 one, how do you get it? Because it's 40 ringgit per month, right? The 960 for 400 minute plan.
Like for a contract of 2 years.
2 years, oh, okay.
For a 2 years contract. So 2 years contract, you have 20. Yeah, 2 years contract. I think it is stated 2 years. Wait.
Okay.
Let me check.
Okay. Got it.
Yeah, 2 years contract. Okay. So 24 months times 40. That's why you get 960. For B, 24 months multiplied by, if I'm not mistaken, is 60. Okay, 60 ringgit for the 800 minute usage plan. Okay, so that is how you calculate it. Okay, and you can go for the remaining, because the second one is also, although it is simple, but I don't want you to just miscalculate it. Okay, so for the second question, again, this is an issue of a discount voucher. Okay, some issue with regard to discount right again. Okay, but I just want you to basically allocate, okay, the price between the product and the discount voucher. Okay, so company ABC enter into a contract for a sale of product A for 100 ringgit. As part of the contract, company give the customer a 50% discount voucher for any future purchases up to 100 ringgit in the next 30 days. So if you purchase product A for 100 ringgit, you will get a discount voucher, and you can use that discount voucher for your future purchases up to 100 ringgit in the next 30 days. But the company also intend to offer a 10% discount on all sale within the next 30 days as part of their seasonal promotion. Okay? And it is stated very clearly here, a 10% discount, okay, which is given as a seasonal promotion, cannot be utilized in addition to the 50% discount voucher. That's mean you cannot get 60%. Okay? So that's mean you cannot get 60% discount because you get 50% discount from your discount vouchers. And the company also basically offer a 10% discount as a seasonal promotion in the next 30 days. But you cannot use it together. That's mean you cannot get an additional 10%. So that's mean now your discount voucher, okay, your material right is only 40%. Okay, it's only 40% because for all other customer who have not do any purchases before, they can still get the 10% discount. But you, since you have purchased before, you get 50% discount for the purchases of up to 100 ringgit for the next 30 days. So actually your material right is only 40%. The difference between your discount voucher and the 10% discount we offer to all. Okay, so that is what you need to be careful. Okay, so the material right here is only 40%. The difference, the difference between what all the customers who have not done any purchases before, they also can get discount. If they don't get discount, then fine. The whole 50% will be your material right. Okay, but now your discount voucher value is the whole. Okay, 50%. But now it's only 40% because the company also give 10% discount for all other customer. The likelihood is 80%. You will use a discount voucher, same concept before, and you estimate on average the customer will spend about 50 ringgit. Okay, so 50 ringgit. So how to calculate the stand-alone selling price of the discount voucher? So average purchases is 50 ringgit. The incremental discount is only 40%. The likelihood of spending a discount voucher is 80%. So 50 ringgit multiplied by 40% multiplied by 80%. So the stand-alone selling price of the discount voucher is 16 ringgit. That is what you have estimated. Okay. And then you need, when the customer purchase a product at 100 ringgit, then you need to allocate, okay, between the price to product A and the discount voucher. Okay. So the bottom one is basically the calculation of the allocated product A and to the discount vouchers. So the stand-alone selling price of the product A, of course, is 100 ringgit. The stand-alone selling price of is 16 ringgit. From there, you do okay, and the company sell product A for 100 ringgit, so you need to allocate. So
So you're muted.
Okay, so are you hearing what I have discussed with you just now?
No,
Not
sir.
on the part. Not
sir.
No,
No,
sir.
sir.
Because suddenly, I don't know, hear something strange in terms of the sound. So the second part, can you hear me when I discuss this? When I just discuss it alone.
Can hear but cannot see your screen moving.
Oh, okay. So, the second question, correct?
Yes.
The second question? Okay. So, I don't know. Let me just see again. Okay. I don't know. It become again. Like that. Okay. I think from the second question, what is the important point from the second question is, although the discount voucher give you 50% discount, but since the company is also offering a 10% discount to all customers within the next 30 days, so the material rights calculation, the standalone prices for the material right, which is discount voucher here, should be calculated only based on 40%. Okay. So the question also gives you the expectation on the average purchase, which is 50 ringgit. Okay. The material right percentage that will give you the estimate standalone prices of the discount voucher, which is equivalent to 16 ringgit. Once you get that, then allocate the price of the selling of product A. Product A standalone price is of course 100 ringgit. So the standalone price of the discount voucher is 16 ringgit. Okay. Inshallah, I will upload again the revised answer in your Google Classroom. Okay, in your Google Classroom. So I will upload the revised answers for the previous example. I will also upload the answers for the exercise I given you last Tuesday. I and also upload to you the illustrative example from MFRS 15. Okay. So I hope that will help you, and I hope inshallah on Friday also Dr. Fatima can basically explain about the structure of the final exam, and inshallah since our exam will not be next week, ask me next week. Okay, of course tomorrow or Friday also possible, and next week. And then I will try to answer whatever question you basically posted to me. I'm not sure whether the line will still be okay. I think that is what I have planned for today. Are you still hearing me?
Yes.
Yes, sir.
Okay. Okay. So I think that is what I planned for today. If you still have question, please inform me. Okay. Either through WhatsApp or through email. I will try to address your questions. Okay. Exam will be on 18. So hopefully you'll be fully ready for the exam by that time. Okay. So I think that's all. Unless if you still have some more questions.
Sir?
Yeah.
Sir?
Sorry,
Yes.
but
Yeah.
can I know how we get the average purchase of 50 ringgit? I'm quite unclear with that.
It's already provided in the question.
Oh, is it? Sorry.
Yeah, toward the end. Toward the end.
Oh, okay,
In,
all right.
in the second paragraph.
Okay,
Okay?
thank you, sir.
You see it already? Okay?
Yes, sir.
Okay.
Thank you.
Yeah? Okay. Okay.
Sir,
Yeah. Yep.
later you will also give back our GE, right? With the
Yeah, inshallah. Inshallah. Okay. I will give the answer.
yeah, the answer.
I will give the answers. I hope you still have your answer with you.
Yes.
Do you have
yes.
the answers still with you? So your group answer is still with you. I will give you the answers for your GE. Okay?
Yes, please.
Sir,
Thank you, sir.
how about our carry
Okay.
marks? When you will update our carry marks?
I hope that is for today lah. Okay? If you still have question, please contact me. Yeah, brothers.
When you will update
Most
carry
of the carry mark, most of the carry mark actually will provided by Dr. Fatimah. Dr. Fatimah have agreed to give me today, so I'm waiting from her. Then I will basically key in into the system. From my part, is only the GE and your final exam. So I'm waiting from Dr. Fatimah. Inshallah, he agreed to give it for me today. He agreed to basically provide it for me today. So once she provided it to me, inshallah, I'll basically key in into the system. Okay, brother?
Okay, sir, thank you.
Okay. So I think that's all, but you can always still communicate to me, okay, until the final exam. Okay, so if I intend to basically stop, but of course the discussion can still continue. So I think that's all for today's discussion. I hope that will give you more understanding, okay, in order to prepare you for the final exam. So thank you very much for your participation. Okay, thank you very much again for your question. So I think that's all for today. I end my class today by Assalamualaikum warahmatullahi taala wabarakatuh.
Thank you.
Thank you, sir.
Thank you, sir.
Thank you, sir.
Thank you so much, sir.
Thank you.
Thank you,
Thank you
sir.
very much, sir.
Thank you, sir.
Thank you, sir.
See you Zakat
Thank you,
next
sir.
semester, sir.
Thanks. Yeah, tomorrow there will be zakat class, more discussion on the question, more discussion on the questions. Inshallah.
Thank you, sir.
Inshallah tomorrow we have more discussion on zakat.
Thank you, sir.
Thank you very much. Assalamualaikum.